All right. So let's see. The attendees coming in. Attendees are coming in. We're going to give them just a couple more minutes. If you are attending, obviously, if you're attending, can you see up top? You should have a chat and a Q&A. If you can, please enter into the chat where you're from, not the Q&A, in the chat where you're from. I just want to make sure everybody could hear us. Anybody, Bueller, somebody enter in. Just let us know where you're from. Can anybody see anything yet?
Yeah.
Oh, there we go. Finally, yeah. Barry's usually the first from Parsippany, so I like Barry. Okay, great. So, all right, so we know people can hear us. I don't know what the delay was, but London. Did you see that? Yeah,
I see that.
They got to be joking. We can't be that popular across the pond yet. I think in London, though, it would be called pay. Okay. All righty. Okay, great. So it sounds like people are hearing us. I want to welcome everybody. It's been a while since we've gotten together, but there's a hot topic that we're going to go over today. And we have a couple of housekeeping items that I need to go over before we jump into the session. I thank everybody for entering into the chat. Looks like somebody already entered in questions. If you started, okay, you can hold off on the questions because you may ask something that is going to be answered later on, and we already got some preliminary questions in too. So Jane, hold off on your question because I guarantee it's either going to be talked about or it's going to get pushed up and it's going to be forgotten. But thank you for entering in the Q&A. If you have a question, please enter it in the Q&A later on. Don't enter it in the chat because we won't be monitoring the chat as actively, but we will be watching the Q&A to see, especially if it's on the topic people are talking about. If you there are handouts available. If you look up top also, there's a selection for handouts, and you can download the PDF and follow along at your pleasure. For those that are looking to get CPE out of this, you will be an hour of CPE. However, you have to answer the polling questions. There will be 4 polling questions as we go along, and you have to answer at least 3 of the 4 polling questions in order to be able to get the CPE. We have 3 speakers today. We have Mark Weber, who's a partner at the firm. We have Diana Gallego, who is a supervisor with the firm, and Diana has been working on the PPP task force, I think, since its inception. And we wanted to get somebody new speaking on this. And then we have a new partner to the firm, Chris, my favorite Martian, is here to speak with us. So let's jump into the topic. And I mean, everybody has been anxious about this. We thought about presenting on this a couple weeks ago, but the information was so preliminary, so we decided we're going to present after it all come out. And as of yesterday, more information came out. So we've been updating these slides, and I can guarantee there will be more information that will come out after today. And we're here to talk about the PPP, which we talked about a long time ago, but now it's PPP adjusted and PPP2. We're going to cover the recent developments, new regulations, some details of the first draw. That was the old, the stuff back in May, June, how it's rolled forward. We're going to talk about the second draw, gross receipts, which everybody's been asking about because everybody seems to be very confused. The employee retention credit, while that's not PPP, there's been a lot of discussions. It's connection with PPP, so we figured we would throw it in here, and then some other considerations. Now, we know that nonprofit people are on here, and there are a lot of questions from nonprofit. I will say, for the most part, nonprofits are not significantly different. There are some nuances, some intricacies, like 501c6s are now included. But for the most part, nonprofits are treated very similar to commercial entities. There are a few quirks that we'll be happy to try to address. But I know that Bridget, who sits right next door to me in the office when we're allowed to go in, yells at me that the nonprofit want to hear more and more about this. So we're trying to give you as much information towards nonprofit, but sometimes there's a little nuance that you want us to focus on, and we'll try to. We may miss it. So before I jump to Chris, our first presenter, I want to make sure we know how to do the polling. So if you could just look at the polling and answer it so we can move on quickly. Did you apply for PPP in the first round? Yes, 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 wish I didn't. No, I wish I had, though. No, I didn't qualify / need it. So the quicker we get through this, the quicker that we can get to the next presenter. So 42. We leave it open for a minute or until we get around 90% of the responses. 63. Hurry up, answer. Hurry. So we're still at this point, we're 50%, 76% of the people have applied. 1 wish they hadn't. 2 didn't but wish they had. And then 13 said they didn't need it or qualify. I hope that you're attending for this just to check out the sweater today and you didn't need it. I'm hoping that you're surviving through this pandemic. If you didn't qualify, that stinks. So, all right, I'm going to close out the poll. And then, Chris, you ready to go? Or?
Ready to go.
Great.
All right, thanks, Brad. As Brad said, there has been a lot of new information that's come out over the last week or so with regards to the first draw and second draw rounds of PPP. But substantially, I mean, I just want to say at a high level, a lot of the rules, a lot of the things that are coming out are very similar to the first round. We'll say the original PPP, if you took it last year, as far as how you calculate your loans, how you apply, the forgiveness process. So just kind of keep that in mind as we're going through this. We're going to cover some things at a high level because we've covered them before in the past, such as how to calculate certain areas, and mainly because, it hasn't changed that much. So the things that have changed, we will cover in more detail. Obviously, the big news over the past few weeks was the Consolidated Appropriations Act of 2021. So we did want to just point that out because there was a big item in there regarding PPP, and that was the deductibility of the expenditures. We weren't sure if that was going to go through or not. They were saying they were going to be taxable. You'd have to add them back on your tax returns in 2020 if you were not forgiven. Now those expenditures are deductible. So that was really good news for everybody. Getting into the PPP round here, FAQs that were released this week. There was a lot of information that came out regarding how to calculate your maximum payroll costs for the loans. So that's some really helpful information. And again, it's very similar to how it was done before, but we will talk a little bit about that. Gross receipts, as Brad said, is another big item. The 25% reduction in gross receipts quarter to quarter, 2020 versus 2019, which is a requirement for the second draw. We'll get into that in some more detail. And the other item specifically is the documentation requirements, including if you're going to use your tax returns rather than your quarterly information to apply for the second draw. So,
Hey, Chris, I just want to get out of the way because I know somebody's going to ask this, and I know you're going to say it later, and it's easy. It's good to repeat it. What you say might be the bank may request this documentation. That's just a general comment because I think you're going to say all banks may be requesting some different information, correct?
Right. Yeah. There's the requirements of the SBA, and then the banks that we're hearing are maybe adding their own layer of additional requirements. So, yep. There was recently in the last day or two a release of some new forms and changes to some of the forms. They finally released the short form 3508S, which is now for loans under $150,000. Not a lot of documentation required to be submitted with that, so that's really good for the smaller loans. And then they changed the 3508EZ and the standard 3508, mostly just for the changes with this last act that came out. And then some of the procedures for the banks and the borrowers, some procedural notices came out. A big one that was interesting was speaking to if you had an excess loan where you got more money than you should have, whether it was due to borrower error, bank error, things weren't clear when you applied as far as what the rules were, and they changed the rules later or cleared up the rules later. So if you do have that issue, there's a procedural notice out that can help you with that, and you can reach out to us as well if you you need assistance. You go on to the next slide. So getting into what I'm calling PPP round 2, which really encompasses the first draw, the new first draw rules and the second draw rules. First draw basically is your original PPP if you took it last year, and they also open that window back up for this year. So you have until March 31st, 2021. If you didn't take a loan, if you were eligible to take a loan, it's basically the same terms as before, which we'll talk about in a minute. Also, if you did not receive the full amount of loan that you were entitled to, there's some eligibility criteria there, a very narrow window for some borrowers that you may be able to get an increase in that original first draw loan, and we'll talk about that as well. And getting into the second draw, which I'm sure a lot of people are really curious about that you're here for, and there's really two main criteria to get in under the second draw. And first, obviously, is you had to have taken a first draw loan, or maybe not so obvious. So if you didn't take a first draw loan, you think you're eligible for a first draw loan, you can go back and take that, but you can't get the second draw loan. And honestly, I don't know if you'll be able to get a second draw loan if you hadn't gotten a first draw loan yet, just because of the time frame and the ability to use those funds in that short window. However, that's what they're doing.
So I want to reiterate, if you did not take PPP previously, but all your buddies did, and you're like, I want to be part of the cool gang, so I'm going to go take PPP too, you can't. You automatically fall into the PPP 1 bucket. And then if you say, well, I want to get both like my buddies did too, well, by the time you get the application, fill it out, get the funds, use the funds, the window for PPP 2 is going to probably be closed.
Right. Yeah, it's only until March 31st, so.
Okay.
And then the other, if you just go back one slide there, the other criteria for the second draw is the decrease in revenue. So you must have had a 25% decrease in gross receipts, which we'll talk about what that is, in any quarter of 2020 versus 2019. So there are some nuances there that we'll talk about. And like I said, the programs are substantially similar as they were before in the original round of PPP, as far as the application process, the forgiveness process, as far as we know now, and most of the eligibility requirements, although there are some changes in businesses that can apply, like 501c6s, for example, with some qualifications there as well. But there are some new opportunities there for businesses. And the other big item is the expense categories that are eligible for forgiveness. We will talk about that in detail later. So there's a couple other new items, operating expenditure, software costs, those types of things that will allow you to get maximum forgiveness, assuming you still hit the 60% payroll rule that we will talk about again as well.
I mean, they'll see later on, Chris, but it's pretty much everything that they've been asking for at previous webinars that we did. If they can include it as expenses, is now included.
Right.
So, for all the time we said no, we're like fighting parents with the SBA. We always said no as one parent, and they all of a sudden came back and wanted to be the cool parent, and they're letting everybody do it now, right? So I ruined the surprise, but they'll see again later. They'll see it later on.
Yep. So as we said, the first draw part of the new act, you can still apply for those loans under the old rules, which is the $10 million maximum loan, and you have to have 500 or fewer employees. In most cases, there are some different industries under SBA rules that you can have more than 500. So if you do have more than 500, I would check with the SBA and their rules and see if you qualify. And as I said, you can apply for an increase in your first draw PPP loan. It is kind of a narrow scope of people that can probably do this. Some of the main reasons would be if you applied early on. I heard a lot of banks weren't allowing partner compensation as part of the loan. Later, we found out you could include that. So if you want to go back and try to apply to get that increase, you can do that. Maybe you returned your funds for some reason. You really ended up needing those funds. You can go back and reapply. The one issue that here is that you do have to work with the original lender or the current lender of record. I know there was a lot of loans that were either sold off or moved to other servicing providers. So you would go to the new servicing provider if that's the case. And you can only do this if you did not receive forgiveness from the SBA. You may have put in the application, but if they didn't accept it yet, the application can be pulled and you can then apply for that increase. So we put the link in there to see, so you could check if you are eligible and looking into that. And with that, we'll hand it over to Diana. We'll go over some more details of the how to apply for these loans.
Yes, so the terms of the loan are the maturity of the loan is 5 years at an interest rate of 1%. Borrowers now have more flexibility when choosing their cover period. This can be between 8 and 24 weeks. As previously mentioned, the maximum loan amount for first draw borrowers is $10 million, and for second draw borrowers is $2 million. There's no collateral or personal guarantees, no fees charged by the SBA or bank to the borrowers. Payments will be deferred until the borrower's forgiveness is determined. Loan forgiveness must be submitted 10 months after the end of your cover period.
That's big, because I got a lot of questions on that last one in the first round as to when the payment starts. Because when the SBA originally came out, they said, okay, 10 months from getting the money. It sounded like what it was, that they had to start making payments. But if you do the cover period plus the 150 days to forgiveness, so the payments don't start until, or the payment clock doesn't start until after forgiveness is actually given.
Yes, correct.
All right. Now that provides a lot of clarity. Well, I'm hoping nobody's going to have to pay, but I'm sure that there are going to be some people that will not be getting full forgiveness, especially some of the nonprofits we will mention later on. So thank you.
So here we have some eligible borrowers, which include self-employed individuals, any nonprofit organizations, veteran organizations, and religious groups. We do now have some new eligible borrowers and a list of ineligible borrowers. As Chris mentioned before, the 501c nonprofit organizations are now included in eligible borrowers, and then here's the list of ineligible borrowers.
So, and I saw on this list that I think it was this list, or I saw it, that the shuttered venues, is that the one that's included on here? Receiving shuttered venue operator grant. We will cover, we have a slide on some presentation on shuttered venues because somebody had asked a question, and we give the list there of what falls under the shuttered venue. And Lyle, I don't know if you're on here, but museums is included on shuttered venues. But you can't double dip and get shuttered venues grants and PPP. So. Okay, and the entities, I just saw real quick, entities in bankruptcy. Mark, I don't know if you saw this. I actually had a client that, not because of COVID, but filed for bankruptcy, Chapter 11, so they came out of it. But because of that, they were blocked from PPP. I don't know if anybody else has seen that, but I found that interesting because COVID could have put some companies into bankruptcy, and they're Chapter 11, they're coming out of it, but they still have to pay payroll. So I was very interested to see that was included in there. I don't know if you saw that.
Yeah, I have a client that, because of COVID, they went out of business. They had gotten PPP money and they filed for bankruptcy, and they're done. So they're dealing with, what do I do with, the PPP funds, and, they've got their lawyer working on it. And my feeling is that they're just not going to have, be able to pay it, and they're bankrupt.
Well, unfortunately, they weren't personally guaranteeing it.
Correct.
A new person to this is a very important person. Scott Shapiro asked, weren't newspapers allowed in round one? Anybody know that? Do we have newspaper clients or something that Scott's asking about? Or
yes,
just Scott?
we do.
Okay, yeah. I didn't know.
Scott,
I didn't know if he read a newspaper this morning. He's just going to start asking random questions. But do we know if newspapers were included in the round one?
I don't think there was anything specifically stated in round one about newspapers, and I'm not sure why they wouldn't have been included.
But this time, now they've addressed it as an affirmative. So I guess. Okay. All right, Diana, I completely derailed you and took you off track. So sorry.
Okay, so eligibility requirements. If you're applying for your first draw, it's 500 or fewer employees. And then for your second draw, it's 300 or fewer employees. Second draw borrowers must meet the 25% gross receipts decline analysis. And you can choose any quarter in 2020 and compare it to the same quarter in 2019. If you do meet the requirements set by the SBA for the 25% gross receipts analysis, decline analysis, it is important that management does do a self-assessment on the necessity and just document it for internal purposes. We know that first draw borrowers that did apply for PPP loan forgiveness and received loans over $2 million were required to submit the loan necessity questionnaire. So it's just really important to document that. You do have to certify by the time that you do receive the disbursement of the second draw. If you did when that your first draw funds were fully utilized or will be fully utilized before the disbursement of the second draw, and businesses do have to demonstrate that they were in operation on or before February 15, 2020. So one of the documents that they can submit for this can be a copy of the tax return.
Diana, somebody asked a question. If it's any 3 months, you have to look at it in calendar quarters, correct?
Yes,
Correct.
yes. In any calendar quarter.
Yeah. If February, March, and April, is what triggers it. No, it has to be January through March, April through. See if I could do this real quick. April through June, July through August, etc. You have to look at it in calendar quarters. One of the other things that somebody had asked, and you said this multiple times, and I appreciate you saying it, but I just feel we have to repeat it, is make sure you have it documented. Because somebody even asked a question preliminary saying, oh, so I don't have to provide the information up front, which scares me because then they start thinking, oh, I really don't need to pull that information together yet, but I'll just get the loan. And go ahead.
So if your loan is over $150,000 for the 25% gross receipts decline analysis, you will be required to submit that with your loan application. If your loan is under $150,000, you're not required to submit it with the application, but you should document it for internal purposes and in the event that it's requested by the SBA.
Yeah, because there's a good chance they're going to possibly request something or have some sort of information, and then you're going to be scrambling what your decision was and why you made that decision later on, and you'll be calling your accountant and yelling at them. So I'm protecting your accountant, even if it's not us. It should be us. But Frank asked the question that people keep saying, and I'm going to summarize, Frank, because it's starting to go up. So if you were down in quarter two, but you were up for the rest of the quarters or up for the whole year, you still qualify, correct?
Technically, you qualify, but then you have to ask the necessity question, because in order to get the loan, you're supposed to have uncertainty. Okay, clearly last year, everybody had some form of uncertainty. I mean, I have clients that thought they were going to get crushed and they ended up having their best year ever. But at this point, you have, 9 months of last year behind you from COVID. You should be able to determine whether or not you actually have necessity. And that's a judgment call, and it's a moral call that somebody has to look at, in the mirror and say, hey, I really believe that I have uncertainty here, as opposed to, hey, I got a good one bad quarter, but I'm crushing it now, so I'm still going to take the money because they're going to give it to me. That's something somebody has to deal with on their own. And the SBA could come back at some point and say, hey, wait a minute, you went and got this money, you really shouldn't have.
Mm-hmm. Okay, thank you. And then Jenny asked, when is the 300 employee requirement? Is it at submittal, or is there any particular window?
So you can use 2019 or 2020 when you're calculating your payroll costs, but it would be an average of the total year.
Of whatever pair. Okay.
Mm-hmm.
Okay. I see there's some other questions, but we'll go on. Glenn, you're not allowed to ask questions.
Okay, so when you're calculating your PPP loan, the loan amount is calculating based on 2.5 times your average payroll cost. If you're a seasonal employee, you can choose any 12-week period between February 15, 2019 and February 15, 2020. If you are a restaurant or a hotel, you're eligible to do 3.5 times your average payroll. Payroll cost is calculated when you take, it consists of salaries, wages, commissions, or similar compensation capped at $100,000. So you do have to remember everyone's going to be capped at $100,000 for the first draw and second draw. This also includes employer contributions for group health, life, disability, and vision insurance, and employer retirement contributions and state and local taxes. And when you are calculating your loan, you can use 2019 payroll or 2020 payroll. If you are applying for your second draw, I would suggest if you've had a drastic change from 2019's headcount and payroll cost, to consider using 2020.
Eric, I think Eric asked this question at one of our other seminars, and I off the top of my head, I'm going to say no, but I'll ask it anyway because I want to see what you guys say. I'm not trying to sway your answer with that. If 501c6 has only volunteers because they prefer to keep the money in the nonprofit, is there a way to get forgivable PPP to cover other expenses? And no, the whole essence behind the PPP was to continue to be able to pay employees and keep them economically feasible during these tough times, and then you were able to cover other expenses. So it was mainly directed at employees. So unfortunately, no, I can't see how that could happen unless you guys have. I saw Mark and Diana shake their head, so I was just speaking for them then.
Chris,
Yeah,
too.
Gotta have payroll.
All right, gross receipts. There's been a lot of discussion on this. What's gross receipts and the definitions that are in the actual application and that the banks are putting out tends to be pretty confusing. But basically, they just came out on January 19th. So 2 days ago, the SBA came out with some guidance on this. And they had in there a little sentence at the end of their discussion on for-profit businesses that said, these terms carry the definitions used and reported on IRS tax return forms. So what we're taking from that is that if you use the cash basis method on your tax return, you should be using the cash basis method to calculate your gross receipts adjustments, the difference in the 2 quarters. If you use the accrual method, they have examples. They talk about if you use like some kind of construction in progress method or some other revenue recognition method. The most important thing is to be consistent when comparing the quarters. Okay. In terms of revenue, what's included? There's a list here. Receipts or sales of products or services. Interest and dividends are included. Rent, royalties, fees, commissions. So they say here it does not include any money from the EIDL or PPP funds. So they're not including those. But all other forms, for the most part, included. They don't include capital gains. So if your business has gain or loss from sale of securities, not included.
So Mark, I see. You go back 1 second.
Sure.
I see one word is missing, and I know, Chris, you and I are going to get yelled at on this one, but I want to make sure we address it. Do you know the word that's missing, Chris? It's like an Easter egg hunt for us. No? Come on. What have we been discussing this week? A lot.
Take your pick.
Oh, okay. So, my pick. So, grants.
Ah.
Okay. We can change the slide so that people can download it. We have a lot of nonprofit people on here, and I'm not trying to make fun of the situation, but they ask a lot of questions, a lot of great questions. And just because it doesn't say grants on there doesn't mean they're excluded. Grants are in. There you go. Thank you. Grants are included. Okay. Then the question is, and we discussed this. Are donation gross receipts? Yes, Chris put donations on there
Too long.
It's too hard to type it. If you're a nonprofit and you view something as revenue, anticipate it should be included in here. I think the one item that would be included, not just from nonprofits, but commercial companies, is capital gains and losses, or, gains from sale of equipment or something. I don't see that up here, and I heard that that was excluded. But interest and dividends is, and grants, contributions, anything that you would normally view as revenue, anticipate it's included in here. Okay.
Yeah, the way to look at this really is operating revenue. I mean, things like interest and dividends, depending upon the nature of your business, could be significant, but for the types of businesses that we deal with, most likely not. Although I had a client applying for PPP2 the other day, and they had insignificant interest. I said, add it in, because you don't want to leave anything out, add it in. But anything that's really, for the most part, operating revenue, one-off things like capital gains or sale of a piece of property or something, no, but they're trying to measure operating revenue. Have you been impacted because of COVID on your operations?
Okay, yeah. And it says gross receipts. Somebody said we go by gross receipts or net income. Gross receipts.
Gross receipts. It's top line.
Yeah, don't talk about expenses at all. Gross receipts. Somebody has a very interesting question. I don't know if we're going to have an answer for this one, because this gets deep into it. And Ben said, yeah, best way to look at it is what do you put on your tax return? Exactly, Ben. Here's an interesting one. How about intercompany revenue or revenue from affiliates handled?
Well, if you have affiliated companies, you're supposed to be applying under the affiliated group. So I would think if there's intercompany sales, those would get eliminated, wouldn't they?
They would, but I guess the only issue would be is if you're applying only for one company, then you might not, and you're not applying for PPP with the other companies. Maybe you're not in the affiliation rules. But I still think that I don't know the answer. I think you'd have to look at it, because somebody could easily manipulate that. If they have multiple companies and they want to get it in one company and avoid it in another by, filtering the income to another company. So
not our clients, other people's clients. No.
Yeah, not us.
All
right.
And, yeah, okay, go next. The 990 is a tax return that we're referencing, and I think the SBA actually gave out some guidance as to the roads. So, okay, go ahead.
Pinging. All right, so you can use quarterly or monthly financials. They don't have to be GAAP, but should be consistently applied, which is what I was saying earlier. Again, you're looking at top line. So unless you have, complex revenue recognition issues in your business, it should be pretty straightforward. There's rules for businesses that are not in business in certain quarters. And this recent document that came out on the 19th, actually has some really good examples, Q&A here. And what happens, and I saw there was a question before, somebody said, well, if we weren't in business at all in 19, what do you look at? And the answer is then quarter over quarter in 20. So the first quarter versus the second or third or fourth. And that could be, challenging. But they have specific rules in this guidance that says if you weren't in business all of 19, then you just match up the last 3 quarters or the last 2 quarters or the last quarter, etc. Documentation, Diane, I believe, mentioned this earlier. If you are less than 150, you don't have to worry about documentation until you apply for forgiveness. If you're over 150, you're supposed to submit it with the application. And if you give them quarterly financials, assuming they're not audited or reviewed, there's not an accountant's opinion attached, they do indicate that you have to sign the financials yourself, certify that, to your best, probably to the best of my knowledge, I certify that these are correct, blah, blah, blah.
Yeah, Mark, that's not an auditor's certification.
It's
correct?
their own, it's the company's officer's certification that they believe that the financial statements are accurate to the
Okay.
best of, their knowledge.
And we had two. One second. Because before you go, let's stick with gross receipts. We had two other questions. Somebody said, "What about sales tax returns?" And no, I wouldn't even. Don't start trying to get tricky. Or when we say tax returns, we talk about federal filing returns. Your 1120, 1065, 1120 S 990. Is there? Can somebody give me another one that I may have forgot? You start picking state tax returns. New Jersey, you start with gross receipts, and then you back out taxable. But I don't know. We just lost Diana. I don't know if the state of Kansas, if that's the way their sales tax returns are shown. So we're talking about more the federal tax reporting. And then somebody said they have a nonprofit that got a new grant that required new expenditures. They're going to show an increase in revenue, but you can't offset the expenses, because while they may have less net income, they do have greater revenue. It's based on gross receipts. So.
Okay,
I would just jump in on the tax return thing. I would probably say that, if you're going to use your full year tax return, I don't know if that's the best idea. You've got to basically put a draft together on it, certify it, like Mark was saying before. This is not an accountant or CPA. This is you certifying that the draft is it's accurate. So you probably don't want to go down that road. I would look more towards the quarterly financials, internal financials, bank statements, cash receipts, that type of thing. That's probably the best way to go.
Right. And the tax return, they really talk about the tax return when you're using the simplified annual method. So if you can't, for some reason, do quarter by quarter analysis, they say, well, you could use the whole year to be simple, and then you have to submit a tax return. I think that's probably going to apply mostly to sole proprietors, self-employed individuals. And then they give them a draft Schedule C, and which they would sign off on. And Chris just mentioned the other point in here is quarterly bank statements. I guess for somebody who doesn't have the ability to actually generate their own sort of P&L or books and records, they could give them bank statements to show reductions in deposits if they're on the cash method.
Yeah, and that's, Mark, it's interesting because we saw somewhere where they describe, revenue as your receipts. And the reason why I mentioned that is because somebody asked the poignant question of what about unearned revenue? Now, we have a lot of clients in commercial nonprofit that do have deferred revenue for whatever reason. And if that's your method of keeping track of your revenue, you can do it, but you have to be consistent with it. So you can't do unearned revenue and say, well, I'm going to defer in second quarter 2020. You got to go back and look at the same methodology in 2019, and it really should be the way that you review your information. That's my editorial comment. So,
PPP loan forgiveness for wage payroll costs. It's essentially the same as what was there before. It has to be 60%. Payroll costs have to be 60%. And it's the typical things. Diane mentioned it earlier, wages, health insurance, employee benefits, state unemployment or disability. It doesn't include FICA or Medicare or any withholding. And then there's changes to eligible costs for anybody that's now doing first draw or anybody doing second draw. They've increased the expenses, and I believe Chris is going to give some detail on that. So I'll just let him take over from here.
Yep. So there are basically three new categories. Diane, if you want to move to the next slide. Three new categories that you can use when we get to the forgiveness phase as far as how you can spend these dollars. And the first one is they're calling operating expenditures. So these are items for software, cloud computing costs, anything they say to facilitate business operations. It's really a broad scope of what they're encompassing here as far as software and things like that. So your accounting software, your payroll software, if you have different tracking for supplies, inventory, expenses, those types of things. So I think we're going to end up getting more FAQs on these items that'll clear them up over the next weeks and months. So we may not have, if you have specific questions on these, we may not have the answers. This is really, I think, all the guidance that is out right now is what's here.
And the big thing about the cost is, a lot of people, when they went from 8 to 24, then automatically had enough payroll to cover the whole loan. And because you can use up to 40% for non-payroll costs. So then they started saying, well, I don't need to include this. And some people we had always recommended accumulate all the costs that you believe relate to it, and then you can carve out what you need. Now, which you'll talk about in a little bit, the employee retention credit, you may want to use that as much of the 40% as possible.
Right.
And here are the different costs that you can get in. We're not trying to game the system, but there's another item out there to consider that may make you want to use the 40% that's available.
Exactly. Yep. The other categories, and I mean, I don't know how much we're going to be dealing with this in the New Jersey area, but public disturbances, vandalism, looting. If you've had any damage as a result of that during 2020, those are eligible costs. And then covered supplier costs. This is an interesting one. So it basically is expenditures to suppliers of goods for supply of goods that are essential to the operations of the borrower at the time at which the expenditure is made. Now, they do have to be paid pursuant to a purchase order or contract, prior to the beginning of your covered period, except in the case of perishable goods, which can be in effect anytime before or during the covered period.
Hey, Chris, there's one thing I noticed when I was reading the slides. Did you say vandalism or looting? Okay, which I found interesting. And I know that you had a client in the Philadelphia area that got hit pretty hard. But the one thing I noticed that's not on here, but a lot of our clients have been affected by this, is PPP costs. So that you and I have a mutual client that their whole lunchroom is cordoned off in little cubicles now that they never had before, because that's the only way they can have people eating there. And each station now has things. You work with supermarkets; they had a lot of PPP costs. Is that considered an eligible cost?
Yeah, that's covered under the supplier cost. That's the last bullet there. So that's any worker protection expenditures, your gloves, your mask, your plexiglass, anything you really had to do to modify or keep people safe as a result of health and safety requirements. So it's another very broad area that you can use for those costs.
Okay.
As Brad said, we're going to touch on the employee retention credit, mainly because there is some interplay with PPP. But some of the main points here, is that they did expand the use of this credit to those who do have PPP. There are some strict requirements as far as how you would get it. You either had to be partially or fully shut down as a result of government order, or you've got a decline in gross receipts between a quarter in 2019 and 20, 50% or more. They did change this under the new act for 2021, where if you do have a closure or quarantine or have 20% drop in gross receipts compared to the same quarter for 2019, you can qualify for this credit also. That's for the first 2 quarters of 2021. And they did extend it through June 30th of 21. And what this credit does, it gives you credit for either 50% or 70% of qualified wages, depending on when you are taking the credit and which year, of up to $10,000 per employee. But that is maxed out at $7,000 per quarter, or $14,000 for 2021 if you're taking it in the first 2 quarters. So if you move on to the next slide, what we were referring to with PPP is that you can't double dip on this. It's for wages. So if you took PPP, you can't take the employee retention credit on those same wages. So, situations where maybe you only used payroll on your forgiveness application, you had more than enough payroll to cover your costs of the loan, can you use some of those wages now for employee retention credit? I mean, maybe you shouldn't have used all of those wages on the forgiveness application. Maybe you had utilities and rent and some of these other new costs that you could put in there to get it to that 60-40 split, and then be able to utilize the employee retention credit in some way. So you really have to kind of go through the calculations and see what you spent and what you used it on. But the main thing is that you can't use the credit on the same wages you use for PPP forgiveness.
Yeah. So, Chris, and I know that you and I have been discussing this. Thanks to one of our clients that forced us into having this discussion on this. So, if remember, PPP cuts off at wages of 100,000, right? That's just the wages. Then you add the healthcare costs and the taxes onto that, correct?
Right.
So if you, how about the wages above the 100,000? I didn't see a restriction for PPP. Yes, for the ERC, I didn't see that it's restricted or anything. So there are ways. Right. And also you have a covered period. It's either 8 weeks or 24 weeks. Unless you filed on July 15th, that took you through December 31st. You're going to have a window either before you file for PPP or after you file for PPP where you have payroll that was not covered, correct? By PPP that this may relate to.
Yep.
So, but to Chris's point before, if you haven't filed for forgiveness yet, think about your best ways to use your other expenditures. Now, for the tax people on this call, Mark and Diana, Mark especially a lot more than me. The credit is, I believe you get it by amending your 941s. Is that how they do it?
I believe so. Yeah, I believe so. And the credit is also though, the credit is a reduction of the wages on your tax return. Okay. So you have to reduce your wages just like the work opportunity credit. You have to the extent you get the credit, you have to reduce your wage expense. So there's a income tax play in there that, you're getting a credit on one side, but you're losing a deduction. Now, credits are worth more than deductions, so it's still worth looking at.
Yeah. Because I have a client that's amending 941s for a different reason, and I told him, hold off, because if you're going to get the ERC, you don't want to amend and amend again. You're just going to be driving yourself crazy. So Ellen, I know, who's done a lot of this. Actually, I think Ellen wrote an article on it. You can get it on fourth quarter, 941, if you haven't filed your 941 yet. Yes, Ellen, that's a great point. And that's actually where I was going with my comment is depending upon your window for the 24 weeks, it's probably within the fourth quarter, and the 941 for the fourth quarter may not have been filed yet. Cheryl asks, and Cheryl comes on a lot of these. Good to see you, Cheryl. Can you use the ERC credit on wages for employees that earn over 100,000 during the PPP loan coverage period? You were talking about it while I typed, so I just wanted to make sure. So yes, that's our understanding, Cheryl, that for the excess over the 100,000, that the ERC would qualify because that was not used for PPP. And one last item. Oh, that just keeps coming in. Ellen said, if you've already filed the 941s, then you need to amend and possibly file a Form 7200. I thought so. Chris, did you know there's a Form 7200?
That's a new one for me.
Yeah, I can't count that high. Thank you, Ellen. All right. Oh, this one was me. This was at my request, right?
Yes.
Yeah. So we did have somebody ask, what about shuttered venues? And shuttered venues don't tie into PPP necessarily, but since somebody asked, we want to try and give you much information. You see on your presentation on the slides, there is a link for it. They're not accepting applications yet. These are specific, pretty much, if you know that the entertainment industry was slammed and the venues were just shut down completely. I'm on a board of a museum that we were told, you got to close, you can't let people in, movie theaters, etc. You see the whole list. It's a credit that's available or a grant that's available based on certain information. So we just wanted to make this information available to you. You can go to the next slide.
So kind of to bring it all together, we have some other considerations we just wanted to cover. We've gotten a lot of good information from our society, the AICPA, and they made a good point on last week's town hall that you can spend the money for the first draw after your covered period. So if you didn't have full forgiveness because you weren't able to spend all of your funds during your covered period, you spent them after, as long as you spend them on eligible costs like payroll and you're meeting the 60-40 requirement, you're still eligible for the second draw PPP. So that's important to know. If you didn't get full forgiveness, you may still be eligible for the second draw. The EIDL loans, they're no longer deducted off of the application for forgiveness. That was taken away. So if you did your forgiveness application before and the EIDL wasn't actually part of that application, the SBA would take it off once they received it. So you would get the forgiveness less that amount. They will be giving that back, and they no longer deduct it on the application. You can also refinance your EIDL loan if you had it between those dates, January 31st of 20 and April 3rd. So that's also now included on the applications. And the other thing we didn't want to spend too much time on, but wanted to point out there was some questions about affiliation. So there really is stringent affiliation rules that the SBA has. There's a lot of guidance out there on that. But if you have common management, common ownership, there's a lot of intercompany activity.
Wow, somebody mentioned I'm sorry, Chris, somebody mentioned the polls. Wow.
Oh,
Holy. Hold on a second. Thank you.
That's more important than affiliation rules.
Oh, absolutely. They're concerned about their CPE. Their questions have been so intriguing and they really have been, that I forgot about the polls. Oh man, Colleen's going to yell at me, and this is on tape too. NASBA sees this, we're screwed. Go ahead, Chris. I'm sorry. Affiliation rules.
Yeah, if you do have affiliated companies, it is important to make sure that you're applying properly. You may have to aggregate those companies in order to apply. And then financial statement presentation. Brad, I know this is one of your favorite topics. Do you want to take this one?
Yeah. I'm just so real quick. Have you received forgiveness? 16 said yes. Sorry, 100 responses. 16 said yes. 28 said applied, waiting for it. 34 said haven't applied yet, and 23 said not applicable. So they must love our webinars. Chris, those that haven't applied yet, somebody asked, is a new application coming out soon?
They came out with the applications the other day for 30, the short form, the easy form, the original form. I mentioned that earlier. Yeah, those are out. I don't know if all banks are accepting again, because banks are going on and off with this, as things change. So you have to check with your lender and see if they're accepting at this point.
Okay. And before I talk about financial statements, and we're on retention credit, I'll ask the poll real quick. Are you look for the polls? Are you considering the retention credit? I bet you people were, and now I bet you they're stopping, or they're not sure if they're going to. Oh man, they're answering quick. They really want this CPE. So we're almost at the total amount. So wow, I can close these polls quick. Thank you. Yeah, 20 said yes, maybe. 12 said maybe. 32 said no, and 37 said unsure. Somebody asked, can you use employee partner income as part of salary under the ERC? And no, it's tied to wages. Okay, so real quick, I'm not going to tie up from financial statements, although I would love to. Somebody said their audio is nice, Ted. I would love to speak for an hour on this, but I will say, nonprofits, you have your own considerations. ASC 985, I think it is, talks about how nonprofits should be considering it with some, conditional grants and stuff. They fall under that. For commercial companies, the AICP or FASB came out and pretty much gave definitive guidance and said you could treat it one of two ways. You can either treat it under what I refer to as the FASB model, where you do not take the liability off the books until you get the ultimate forgiveness from the SBA. So if you're a 12/31 year end, you have not received forgiveness yet, you have to leave it on as a liability. You recognize the expenses as you would have anyway. Under an international model, because U.S. does not have government assistance reporting, under the international model, you can recognize the relief of the liability as of 12/31 if you've substantially met all the requirements and you anticipate that you will receive full forgiveness. Keep in mind, this, if you get an audit done, this will have to be audited, and you can't just say, sure, I think that's what it's going to be. I'm in a clear minority where I agree with the international model of matching the expenses with the revenue. But most accountants feel that they like the way the FASB model is. But if you want to have more discussion on this, feel free to reach out to me directly. One of the big things I have to say, though, is too, if you do leave the debt on the books, you do have to recognize it, some short term, some long term, under the traditional amortizing model. So, any other considerations that we're going to go over before I launch the last poll?
Nope, that's it.
That's it. I'm trying to look for any other questions regarding the ERC for 2020 wages. Is there a distinction between wages you paid employees to work versus wages you paid employees who are not working?
I don't know. I don't believe so. I'd have to look. I'm not sure. I'm not as versed in that area, but I haven't seen anything that would say that you would have to take that out.
Jen said, who just did New Jersey Society interviews with Joe Hunt, can you claim ERC for the first quarter of 2021 if you have the 20% drop in gross revenue, but were not forced to close or quarantine?
Yeah, I believe that's an or. You don't have to have one or. It's one or the other, not both.
Okay. And before I go to closing questions, Ellen just said yes if you're over a limit of 500 employees. Do you know what that was referring to, Chris?
No. Maybe that last question regarding the wages for employees worked versus not worked.
Okay, yeah, because I think the ERC has an employee count. For 2020, larger employees were over 100 employees. 2021 was, okay. So what Ellen is saying for 2020, I think Ellen wrote an article on this, and we should try and make sure that we can get the article out to everybody. For 2020, large employers were over 100 employees. 2021 is over 500, she's saying. So that's why we're going to do presentations now. We're going to have people just submit comments and we're going to read them off. Thank you, Ellen. Really appreciate your support with that. So let's do the last poll, and then we're going to go to some closing comments because we're right around the 9:30 mark. Has your business recovered from the economic impact of COVID? So I'm looking at, we've got around 90 people left. And as soon as we get towards 90%, answer the question, we can wrap this up. And they don't want to answer. So here's something interesting, Chris. How many people are going to say that they've recovered just yes, but they're filing for PPP too? It goes back to Mark's comment before. So these questions are not being submitted to the SBA. Don't worry. I didn't realize the connection on that.
Typical auditor, right?
Well, yeah. Now all of a sudden they just switched it down to no. 9 said yes, 44 said yes slightly, no, 35% said no, and then the ones that I feel very happy for, the 18 that they weren't impacted or business has improved. Good for you, and I'm not being sarcastic. I'm really happy for you. To see if there's anything else. Okay. So, and last thing that Ellen said, if they're over the limits, can only get credit for those not working. So, okay. So we're at the 9:28 mark. I believe we tried to answer every, and now I'm getting Teams message from Luz Maria. I'm sorry, but it's about the article. The article needed to be, thank you. Anyway, so we're at the 9:28 mark. I'm looking to see, and I was actually buying some time to see if any other questions come in. I want to thank everybody for signing up and for attending this. I know that we were a little bit holding off on presenting this, but I'm glad we did to some extent because the information changed, not from December that you would think as much. The information changed from Monday through today even. We will probably have an update on this in a couple weeks. I'm going to commit the presenters to this. That I just want to even come on here and say, hey, here's just some of the updates. So look for it for an email about having another one of these in a few weeks or an update. Colleen and I, Colleen, who's one of the producers of this format, really wants to try and have a session at least once a month, not on PPP, but before we say that we're going to do it, we want to make sure that we're doing topics that you find interesting. So if you can, either in the comments, the chat, or the Q&A, please put up topics that you would like to hear about, because what's important to me or interesting to me might not be interesting to you. So if you have an idea for a topic that you'd like to hear about, please put it up in the chat and the Q&A. The presenters might not be Mark, Chris, or Diana, might be other people. But we try and bring topics that are interesting to everybody. Now, if you just have a topic that's you're the only person saying it, we may not do it, but we want to hear from you as much as possible. So with that said, I'm just going off the bottom of my screen to see if we have any closing comments. I'll go, Mark, do you have anything that you want to close on?
Well, look, just I think that everybody that's got an opportunity and is entitled to take advantage of these programs should look at it closely. I've actually had numerous clients who have emailed me and texted me and said, hey, I got an application from my bank. Should I do this? I'm like, yeah, you know, your revenue was off 40% in the second quarter and it's not getting that much better. You know, you should absolutely do it. So if you qualify for the programs, take advantage of it. And if you need help, of course, you know, reach out to us.
And Mark, real quick, Glenn asked, and the only reason why I bring this up is because it's Glenn and he's our IT person. If we don't answer his question, your computer is not going to get fixed. What does an accrual basis taxpayer that doesn't run financial statement use for documentation? I assume they can't use bank statements. I don't know how they're accrual basis if they don't have financial statements.
Yeah, that's a little confusing.
Yeah. Glenn, we're going to have to talk about this offline. I think he was drinking. All right, Chris, do you have any comments?
I would just say, you know, document, make sure you document any decisions that you're making, you know, especially if someone brought up before, if you had a 25% decrease in a quarter, but maybe you were up for the year, you know, and you're still going to take the second draw. You know, you really need to make sure that you document your reasons why, you know, the conclusions that were made, and, you know, just to make sure you're covered.
Document. So, Diana, I want to thank you for presenting the first time for us, okay, or with us. You're always invited back, so don't be shy. If you have a topic that you think people want to hear about, I'm sure that they would love to hear from you. So, but in today's case, do you have any closing comment you'd like to make?
You know, just the same as both Mark and Chris mentioned, if you do qualify and meet the requirements, just make sure that you document it and you assess the necessity for the loan. And if you have any questions, feel free to reach out to us.
Great.